Bring in Tom Lee, Managing Partner, Head of Research at Fundstrat Global Advisors, as well as a CNBC contributor. In times like this in the past, it always would help to know, Tom, whether it's a sharp, scary spike down, which a lot of times the other side looks just like it, or people are hoping for that so much that they don't see that it might have longer to go. Do you get the feeling that this is not going to be a major sell-off?
For now, I think it is the former that you described. You know, we have over 3 days, suddenly markets reversed and, you know, Japan down over 20%. And as you're pointing out, the NASDAQ could even, you know, decline further. Declines like that are generally symmetric, but you have to watch the VIX. And when the VIX peaks and starts to roll over and fall down, the recovery can be just as quick. I think a lot of this depends on whether financial conditions in the U.S. start to tighten, you know, meaning like, do markets seize up? But with interest rates falling, you know, the consumer's still in pretty good shape. I think on the other side of this, it'll look like a growth scare. But it doesn't mean that
it's a
today's
growth
the bottom.
Scare.
Yes.
It's kind of interesting that it almost looks like the Fed, the market's doing what the Fed didn't do again. It's almost like once again they're there, but not really ahead of what's happening, and they're reacting, not anticipating, kind of again.
Yes.
On the way up and on the way down.
Yeah, the 2 years is signaling that the Fed is behind because 2-year yields have fallen further. But it does seem like, as we look back, a lot more this is because of the surprise hike from Japan and the sort of knock-on effects from there. If that is the primary source of the reaction, I know it's going to be tumultuous for markets, but for the U.S. economy, it's not necessarily bad news, and I think that's why we can balance.
Some of your great and accurate calls have been based on inflation coming in like you thought, much cooler than the market was thinking at the time. I guess the flip side of that is that there can be the dual mandate, there can be labor market weakness associated with why that's happening. Was the asymmetric risk, maybe it wasn't asymmetric, maybe there was a great risk to the job market?
Well, you know, markets don't like surprise. I mean, Friday's jobs report was disappointing.
How far back did they go with revisions down, too? It almost looked like the whole story, the whole narrative that we had is suspect about it.
That's right. And I think many expected that because, you know, the establishment survey versus household had so many gaps. And so that's kind of converging. But that means markets are waiting until August payrolls report, which is not for 4 more weeks, to really know. But I would say, to me, it still seems like July, even as bad a report it was, is more of an aberration. And I think the trend is still...
Weather, there's a couple of things in it that people...
Yeah, there was almost a record number of people that were having temporary layoffs and people who weren't working due to bad weather. And Texas had a big spike in jobless claims. So it does look like the hurricane had some effect, although the BLS said there was no effect.
On Thursday night, one of the people at your shop said 53.90 looks like a good S&P support. Do support levels mean anything? And you want to give me another one, or is it just another one to go through?
Well, you know, because it didn't hold, it means that there are other support levels that could be important.
It might not hold.
Yeah, it could not. I think that the VIX is telling us that.
We've got to watch the VIX.
Yeah, because it spiked Friday, and then it's spiking again today. I mean, the last time the VIX was at this level was April 2020. So for an investor, that tells us kind of where we are, which is we know markets are nervous and they have to unwind, but it's not been a bad time to be thinking that there is a big opportunity on the other side, because once the VIX starts to calm down and markets have already corrected, we know that there's opportunity. Right. I mean, knowing that, of course, it's August, as you point out.
You think the VIX high 40s is where it's going to peak, or low 50s? I guess, you know, it's up 100% almost.
Yeah. The VIX may not have a ceiling because we know in the next couple of days there's also some geopolitical events on the horizon.
And Israel,
yeah.
and Iran, and, you know, we got politics here.
I mean, that's escalating. Some people think, well, that's going to turn into a nightmare this
Supposedly
week.
today.
Today,
or
right.
tomorrow. I mean, we don't want to.
So I think that's why it's all coming to a head this week. I mean, to me, it's a very important week because we know it's hard to catch a falling knife, as you're pointing out. Support levels are being broken, but mortgage rates are falling. The consumer's in pretty good shape, and the job market. I think it's very unlikely.
But so if the knife is falling, and you like catching falling knives, I know you. So the question is, at what point do you catch said knife?
I spent a lot of time talking to Mark Newton, our technical strategist, over the weekend, and I think that there is a reprieve coming this week. Like, who knows? It could even be today, right? We could open down huge, and then after 11 a.m., we could reverse higher. But I kind of agree with Joe that this is still August, and I think that markets traction really doesn't come back till October. So between now and October, it's maybe a range-bound market at best, but there'll still be opportunities.
And we could call it Bitvidia, basically. I mean, it might as well be. Bitcoin, what is Bitcoin? Gold's hitting new highs, Bitcoin. Yields, people look for safety. They buy treasuries, they buy gold. People don't buy Bitcoin for safety.
Yeah, Bitcoin is still mostly a risk-on asset. And, there's potentially been lots of liquidations. I think several 100,000 accounts liquidated over the weekend.
All right, guys, this is the part of the video where I'm going to break down the stocks and ETFs mentioned in the CNBC clip. Today, we're going to be looking at all the major markets and all of big tech. If you haven't looked at the market since Friday, guys, they are absolutely collapsing. This morning, at some point, the S&P 500 was down over 4.5%. The Qs were down over 6.5%, guys. These are the major economy markets, and they were gapping down 4.5% and 6.5%. You can see we're getting bought back up today, and there's still a gigantic gap in the chart. If we would have opened up down here and continued to sell off, guys, it might have been another Black Monday. Some of these stocks were already down 10-15%. Nvidia was down almost 15% at the low of the morning. And this was before we even opened the markets, guys. If we would have sold off and had a lot of selling pressure today, straight out of the open, easily these stocks could be down 15-20%. The major markets would be down over 10%. This would be a disaster. It is still a disaster. A lot of things are going wrong. A lot of big money is being lost, and a lot of the upside trends are being voided. As you can see on the S&P 500, also on the QQQ, we've been following this ascending trend line for months and months and months. And I was telling you guys back here, as long as we hold it, we're looking bullish. But if we start to break this trend line, hold on to your hats because we're going to have a lot of downside pressure. And look how far we've fallen. In 3 days on the S&P 500, we're down over 8%, guys. That's what you're supposed to get in an entire year. The QQQ is getting it even worse. You can see respected that trend line, and as soon as we broke it, we have just absolutely collapsed, down almost 11% from the low. Thank goodness we're getting bought up today. The Russell 2000, I'm not sure what happened with Tom Lee's prediction. It's supposed to be up 40% from this level right here. At the low, it was down over 12% this morning, and it's still hovering down around 9.5%. So that's a bust on the Tom Lee call, going up 40%. The Dow has also broken their trend line, guys. This was the one that was looking bullish. It was on the way back up, and now we've come back and sliced straight through this multi-month trend line, guys. That could mean a lot of downside pressure. Nvidia, everyone's darling. It opened up down here. It was at $90 this morning, guys. It closed on Friday at $103. That is gigantic. That's almost 15% down. It's made almost all of it back up. You can see how much it's respecting the trend line. Once it broke it, drops 15%, rallies all the way back up to almost touch it, guys. These trend lines are important levels on these stocks. Tesla is getting absolutely obliterated. From this point here, we jumped over 59% and we've given all of it back. Again, thank the market gods that we're getting bid up, or this would be a lot bigger disaster than it already is. Apple, look at the day on this. We opened up down here, guys. If we weren't having a bullish day like this, no telling where the markets would be. It's ran 9% straight up after dropping almost 11.5%. These are incredible size moves, guys. There's a lot of volatility. It normally takes anywhere from 6 months to a year to have these stocks move this big. Look at this unbelievable gap on Amazon, guys. They did drop on earnings. They tried to get bid up on Friday. It did not work. They sold off again. We're still trying to fight up, but we have such a big gap. These charts are all ruined. Let's just jump to the VIX real quick before we come back to Google. At one point, guys, the VIX was up over 180%. Look at that, 180% in one day, guys. This was from Friday afternoon to Monday morning before the market opened, the VIX had spiked 180%. The markets were down 4.5 to 6% on the ETFs, and individual stocks were down 10+%. Now, we do have a lot of news hitting all at the same time. We have an election year. We have stuff going on with Israel. We have the job markets coming in hot. We have inflation going up. We have the Fed still not doing anything. We have the consumer running out of money. This can get a lot worse before it gets better, but that does not mean these are not going to be long-term buying opportunities. I'm not recommending to catch a knife or go out and start investing today. When these stocks start showing a consolidation and start going back to the upside, it might be your chance to get in for a steal of a deal, because most of these stocks have all overcorrected. Back to some of the big techs, look at Google. These charts would be absolutely obliterated if we started the morning selling off. Luckily, we've been bought most of the way back up. We got a lot of support. It seems at this 200-day moving average, guys, that might be the only thing that saved us. Several of the stocks are getting close to their 200-day moving average. That's how far we've corrected. Microsoft, second to last. These charts all look the same. They had incredible bull runs, higher highs, higher lows, just going to the moon with no stop in sight. We came back to this 45-day moving average. I said, guys, if we can hold it, we're still looking bullish. If we break it, look out below. Now we're under the 200-day moving average on Microsoft. That is extremely oversold. Meta seems to be taking these moves a lot better than most of the stock market, even though we do have some incredible volatility here, some major moves. I just wanted to give you a quick overview of all of our main ETFs and the main tech stocks and looking at their charts. Today's not about if you should be buying or selling, guys. You invest how you feel comfortable. I'm going to be dollar cost averaging on the dips on the way down because I invest for the long term. I hope you guys enjoyed the video and the breakdown. If you did, smash that like button and subscribe if you haven't already, and I'll catch you in the next video. Peace.